Hi, everyone. Welcome back to Wall Street Silver. Our guest today is our good friend, the legend, David Morgan from the Morgan Report. Great to see you again, David.
Ivan and Jim, thank you for having me.
David, we have to talk silver, of course. Otherwise, the audience will wonder why we're not talking about it.
Yeah.
Well, here's the gold to silver ratio is now higher above 90, and it hasn't been this high since back during, I don't know, the initial March of 2020, the initial, let's call it the virus crisis. When I think it got as high as 126 back then. But 90 is still pretty high because this has been in the 60 to 70 range for much of the past 2 years. I don't know. Historically, this tells you, silver's the one to buy, but I don't know. Maybe get worse. Maybe go higher. What are you thinking?
Well, both. I mean, when we saw that March, 125, 126 to 1, I had people I know and trust ask me what did I think. Of course, no one knows. I said, I don't think it would go above 100. I mean, if you look at a long-term chart from like the 12th century to now, it's only gone above 100 very few times. And every time that it did, it was there for extremely short amount of time. Mm-hmm. And so when it did, and it was 125 to 1, I had built a lot of cash and I bought the day before the low. And the day before the low, I think it was around 14 or something like that. I think it hit 12-ish. And I called the dealer and I loaded the wagon. And then the next day it dropped another $2 or whatever it was on paper. So I called my dealer and I said, geez, if I just waited a day, and I only would have saved about 75 cents on the retail side. And I was working with a pretty good wholesaler. So that's the physical market. Now, to be fair, I could have gone to the futures market like I did in the 2008 crisis. We had $13 silver, but $9 on paper. And I actually bought 1,000-ounce bars and had them, took them off to Golden State Mint in Florida. It was in California at the time, and made my own rounds. I had
nice,
several thousand of these stamped out. He has this die already with the Indian. I don't know if you can see that.
Yeah, I can see it now.
Yeah. And then the back of it.
These are the ones you made? You got these?
He stamped them for me. I bought the bars. That says silver-investor.com. My old domain. I changed it to the Morgan Report years ago. But so I ended up, with $9 silver plus the cost of the dies and the cost of stamping them out. But even with all those costs, like $10, right? Mm-hmm. So back to the 90. It's, as you showed it, Jim, it's spiking. Is it going to go up there for 3 days? I doubt it's going to be there 3 weeks. I almost bet my life it's not going to be there 3 months.
Yeah.
So it worries everybody, and it's not right. But I don't control the markets, and there'll be people that capitulate. It's like I've held silver. I bought it at some of the Wall Street Silver people. I mean, quite honestly, Ivan, I think you guys have been spectacular. It actually surprised me somewhat because I didn't know if you had the wherewithal to hold during ups and downs. And almost all that I could determine, I don't read the Reddit boards a lot, but what I've been able to determine through the investment shows, talking to you, watching almost every video Wall Street Silver puts out, people understand why they own it. And if you have a big enough why, you're going to hold on to it, even though the paper price changes. I mean, I know this sounds trite, but it helps me on days like this that, if you have more silver in July of 2022 than you had in July of 2021, by definition, you're wealthier. Yeah, but right. The price last year was 28. Now it's 19, right? Mm-hmm. Yes, but you have more silver. You got to think of it in terms of silver.
Oh, I'm trying to scrape together enough cash to buy another monster box of Canadian. I'm not going to buy American Silver Eagles because those are still crazy premiums. But
right.
The Canadian Maple Leaf premiums have actually come down quite a bit to be almost reasonable. So I'm thinking really hard about scraping together the cash for a monster box of Canadian Maple Leafs. So anyways, that's how I'm handling the gold to silver ratio. This might buy 500 ounces of Canadians.
I want to digress for a minute. I did 2 shows in Las Vegas in person recently. And on the second one, I stopped by the Sunshine Mint. There is one over in Coeur d'Alene, just an hour and a half from where I'm sitting.
Mhm.
But the big one is in Las Vegas, Nevada. And I got a personal tour because, I am who I am and know the people. But basically, they're running 24/7. I mean, they're running shifts of all day, every day. Told me
Wow.
they're having trouble hiring people. It's a very tough job because the building isn't that well air conditioned. It is, but it's in Las Vegas. But the point I'm making is this: with all the demand, they cannot keep up. They just cannot keep up with the amount of demand there is in the silver market. They do everything from custom, 1-ounce rounds to 10-ounce bars to 100-ounce bars. I mean, they do the spectrum, and it was quite a change to see it because it's so much bigger than the Coeur d'Alene minting facility.
Well, here we are at the beginning of July. The second quarter's over. We're into the third quarter, and we had the first quarter of this year was negative 1.4. I think it was just revised to negative 1.6% for the GDP. So the definition most people have of recession is 2 quarters in a row of negative GDP. And one of the early indicators that a lot of people watch is the Atlanta Fed's GDP Now tracker. And that is showing right now, it's not the official number for GDP,
Right.
but it's sort of the running projection. And it's showing right now negative 1% for the second quarter, which means coupled with the first quarter, that would fit the technical definition of recession. And I guess the question a lot of silver and gold and precious metals people have is the Fed really gonna, in the middle of a recession, now that it's official, and there's no way for the media to really ignore this, I don't think, they're gonna have to acknowledge we're in recession. Does the Fed then keep raising rates in the middle of a recession? I mean, have they ever done that? Just ignore the recession and keep raising rates regardless?
It's interesting you asked that, Jim. I just got that question on one of my from my peer group on my Skype account, and basic answer is no. They've never really. There was one time in 1974, GDP was minus 5%. Inflation was 11%, so kind of similar to where we're at, except the GDP is even lower. And they did raise interest rates, and it was because of oil price shock. So they decided to raise interest rates. So the official rates 9 to 13% from February to July. After that, then they started bringing them down. Problem the Fed has right now, they aren't high enough to take them down. And I want to elaborate on this. I just finished the Morgan report. I'll publish it this weekend, but I don't mind telling the public my take, and it's my take. It doesn't make me right or wrong, but I've got a lot of years on me. I think on the next meeting where they go for interest rates, they will do a pause. I don't think they'll raise, and I don't think they'll lower. I think they'll come out with we want to see more data. Janet Yellen's favorite statement, right? And so they'll pause and wait. And when that happens, I would anticipate a huge move in the stock market. Oh, they're going to lower interest rates, and happy days are here again. And unfortunately, but I'll say it, look, I'm paid to help people through these markets. I think you see a spike down in gold and silver, a stock market high, gold down. But that won't last very long. That'd probably be, in my view, the last opportunity to buy a really good price. And then the next the next interest rate raise, it will either go neutral or lower them. I doubt highly that they raise them. And then we got the gold trade back on, stocks start coming back down. So that's what I see for the future. A crystal ball's behind me. It's broken. Take it with a grain of salt or heed. And I always, I've been very good for years about letting the market tell me, and right now the market's telling me what we said earlier. We're going to get a spike into the gold silver ratio. Is it going to 100, 125? I'll keep my mouth shut because I don't know. I had to guess. Probably get close to 100. I don't think we're going to get above that, but we'll see.
I think they're very close. I politically, I don't think they're going to be able to raise rates. And I don't know if you listened to Jerome Powell testifying in front of the Senate last week, but you could already see the politicians, the line of questioning I kept hearing from several of them was, does the Fed raising rates affect global oil prices? Jerome Powell said no. Does the Fed raising rate affect food prices? Jerome Powell said no. He says, and then the politicians typically they would be saying that then why are we raising rates if what you're doing can't affect inflation? And most of the inflation is energy and food, a huge chunk of it. Then why are we killing the economy by raising rates? And sort of, I could see the narrative that they were trying to build. I don't know whether I agree with it or not, but the narrative they were trying to build was to give the Fed room to ignore inflation and just say, it's all energy, it's all food, ignore inflation, drop rates again, go back to easy money, save the economy. And maybe that's the narrative they'll try to build as an excuse to ignore inflation. I don't know. I think you're right that we're real near the peak of the interest rate hiking cycle. I think they probably will raise rates again, either 50 to 75, because they've almost invested too much political capital not to do it. And it's really their last opportunity to raise rates before we're officially in a recession, when the actual official GDP number. So this next meeting that they have, I think, is it in June or July? I forget.
I think it's June.
But the next meeting they have is probably their last opportunity to raise rates before the political pressure shifts to. So it's, if you're going to raise rates, make it a good one, 75, right? It's
and you have all that room to lower more.
Yeah.
Yeah. Well, I saw there was a funny tweet about that where it says, all right, we have to raise rates to kill the economy, but we have to raise rates enough so that we can then lower rates to save the economy. It was like the way the tone the guy wrote it was like, we're killing the economy so we have room to lower rates later to save the economy. It's like, what? Why are we doing this shit?
Hilarious.
And I don't know. It's the Fed just creates these boom and bust cycles. And I don't know, someone must make money off the volatility or something. It's shit going on.
Oh, the bond traders love it. The algorithms just make tons because there's so much leverage in all the financial markets and almost all the derivatives. I say almost all, but the lion's share are interest rate based. Most of your derivatives out there are based on, T-bills, T-bonds, the T-notes, all that stuff, and interest rates between different currencies and different bonds through the world. It's a big thing based on the whole system, which is a debt-based system. And when you can't pay off the debt, something's got to give. And we're at that point now, as you jokingly said, and did a great job. And thank you, Jim. I think that's the high point of this video is what you said. But they're in a rock and a hard place. What are you going to lower when you're at 2%?
I mean, at least they give them credit. Give the Fed credit. They raised rates a little bit. Look at Japan and look at Europe.
Yeah.
They can't raise rates at all.
Right.
Japan's currency is falling apart because the Bank of Japan, the Japanese central bank, they own 51% of the entire bond market now in Japan. I mean, it's nuts what they're doing in Japan, but they can't let their debt to GDP is well above 200%, I think.
Yeah.
Some insane number that makes Greece look like they're good financial stewards or something. It makes you wonder, all right, Japan's screwed. They've reached the limits of MMT, magic money theory, right? They've already reached those limits. Europe is screwed because they can't raise rates because Greece, Italy, Spain, Portugal they have so much debt to GDP, they can't afford to pay normal market rates for their government debt. So the European Central Bank has to keep buying their debt at these artificially low rates. And they've now come up, Christine Lagarde has come up with this scheme where Germany, France, and the Netherlands are going to subsidize the southern basket case states. She literally classified it. Germany, France, and the Netherlands are going to be donor states, and Italy, Greece, Spain, and Portugal are going to be recipient states. And I don't know how long that's going to hold their euro together, because I would think the citizens of Germany would be extremely ticked off that, I mean, what was unofficial before, they're actually making now official policy. Right. Germany's subsidizing the rest of the continent. And meanwhile, Germany's now paying crazy electricity rates that are up 600% in the past year because of the whole Russian natural. Oh my God, it's like the world's falling apart, David. Why is this happening? Explain it to me.
Pretty close.
Okay, that was my rant. I'm sorry. I just went off on a rant
That's
for
all good.
everything bugging me in the world right now, but
That's awesome.
I don't have the answers, David. You're supposed to have the answers for us.
No, I wish I did. It's only during late evenings around the fire pit I think I might know something. But no, we have to go through the process. And the process of a fiat-based money system is we've got to hit bottom. And bottom means what we're already witnessing, the contraction of the global economy. There's going to be less stuff to buy, and you're going to have to pay more for it. And stuff that you need is going to continue to increase, at least for the foreseeable future, which is food and energy. And then stuff that you want, like what is it? All these discretionary incomes. What's the bike? Halion or something. I mean, some of these stocks down like 80-90% with the
Peloton.
Yeah, there you go. Thank you.
Bike with the iPad.
Yes.
Okay.
So that kind of stuff is just falling to nothing. And but the grocery store is still higher. So this is what happens. I mean, it's not like magic and it's the first time. It's just that people don't know world history or world monetary history or the past. And this is a repeat. Of course, I got a taste of it in the 70s as a very young man, where I saw it. I saw the gas prices skyrocketing. I saw food prices going up. And it was so simple for me. I just went and borrowed as much money as I could and bought gold. And I went to the credit union and I got a loan on a signature, no collateral, at 8%. Think about
Smart.
that, 8%. But inflation was running 13. I already had a 5%, spread. And I bought gold at like 300 and it went to like 850 on my birthday. So I made a ton of money in the futures market, not knowing a darn thing of what I was doing, except the fact that we had high inflation and gold was going to take off. That's what I knew.
Smart.
As far as enter and exiting, luck, pure luck. The last thing you want to do as a young person is make a ton of money in the futures market on your first trade. Then
you think you know what you're doing at that point, right?
That's awesome.
Well, it's all I can say to people is I know it's really tough to see the silver price below 20 right now, but I'll tell you what I'm doing. I'm looking to buy a monster box right now, and it's tough. It's tough to just go out there and hold your, I don't want to say hold your breath, but it's tough to just dive right in and do it when you think, oh my God, it's going lower. At some point, this is going to bottom. Yeah. And if there's another bottom coming at 18 or 17, then I'm going to try to scrape together more money then and do it again. But I just have this sense that the currencies are going to be falling apart.
Yeah.
And the best place to be is going to be hard metal.
Right.
Yep.
Hard metal that's going to have value in the next currency, because I don't see a way out of this. I don't know about anyone else, but I don't see a way out of this except they got to devalue everything. Yeah. And so anyways, it's a tough day to watch it fall below 20, but what else can you do, right?
Happy 4th of July.
People. Happy 4th of July. And on that note, Mr. Morgan, I know you have to run. You have another appointment. So we have a bit of a short video today, but thank you for joining us. We appreciate it.
Thank you.
Totally my pleasure. Thank you both.